Hey, what is up, traders? What up, tycoons? Super excited for today's video. Going to be giving you guys an update on the 60K portfolio. I'm going to break down everything. Today was an amazing day for the market. All right, CPI came out, and for once, we actually had CPI showing that inflation is going down. So the market's raging right now. Currently, the portfolio is up 19% on all of the money that's been invested, right? So that's off this initial 38,500 that's been invested. We have about 12,000 cash because I like to sell option contracts as well, right? Particularly some cash secured puts, and then sell some covered calls. So I broke these down in my last update on the video, and these are all the ones that I sold right here. Now, a few of these I may be getting exercised on, okay, particularly Jumia. Jumia has been crashing pretty hard. And that one I'm most likely going to get called on. But the rest of these, most likely aren't going to get exercised. And that's fine. It's all about choosing a price that you're comfortable owning the shares at. I sold the 4 strike on Jumia, and my average cost is much higher than 4 on Jumia. I have a very small position. So if this does end up getting exercised, I'll be forced to buy about 200 shares of Jumia at the strike price of 4. We can see here, the total account value, once you combine the cash and the money invested is about 60K. When I started the challenge, we had just hit 50K. So it's been going pretty well. All right. We'll take a look at some of the biggest positions, and we'll also take a look at the dividends, right? So you can see here under asset allocation, right, about 62.7% of this portfolio is tied up into dividend stocks. All right. And the reason being is, in these bear markets, it's really tough, to be successful. So one thing that can really help you out is some dividends, right? And that way at least you can earn some passive income on the side, as well as running the wheel strategy, which I briefly just went over, and selling some option contracts to also generate some extra cash, all right, and extra premium. So, we just had the midterm elections; those ended, and then we just got the CPI report. So, there's not too many catalysts currently, that are going to be affecting the market. Right? We have the next FOMC meeting in December. That's going to be a big deal. But they're saying that they're going to be very data dependent. And we finally got some good data. So there's a little bit of hope in the market right now. The S&P is close to like 5% up on the day. If we look here, I'm getting about 4,029 on this portfolio in annual dividends. Okay, the monthly average is about 335 for a total yield of 10.47%. All right, if we scroll up here, we can see the top dividend stocks. Okay, they're going to be these. I believe it's about 4, right? We have ZIM, all right, and this one, I really like this one a lot because of the extremely high dividend. If we look, right, and take a look at the value, the dividend yield percentage is crazy on this one. It's 109.98%. So, most of the dividends that I'm getting is getting paid out from Zim. All right, it's about 6% of the portfolio. Um, and you can definitely tell it's been a bear market, right? Look at the 90-day chart, just pretty much down and flat, right? A lot of these are looking very, very similar, but it's all about choosing, some entry prices that you're comfortable with. I have plenty of positions that I'm down on, right? And then I have plenty of positions that I'm up on. It's all about that balance and it being, overweight in certain sectors and underweight in certain sectors, right? Technology has been really, really brutal. So this position right here, Gush, all right, is the oil and gas, bullish ETF, right? And we can see that that is actually my largest position, about 43% of the portfolio. And the reason being is that, energy is going to be your hedge against this inflation, and also the hedge against technology, right? That position is doing very well, up almost 70% right now off of the initial 12,000 invested in there. Okay, we can see also that I've got some of the marijuana sector in here, cannabis specifically. Okay, ticker symbol MJ. That's an ETF. That position is doing pretty nice as well, up 13.72%. There's a lot of hype and speculation. Okay, that cannabis is going to be legalized federally, across the nation. But look at this, man, just green everywhere today. Every position is up like 4% or more, right? Um, we can look at some of the biggest losers, right? We have GILT, Satellite Networks. It's been really tough for telecommunication stocks, and you can definitely see that. It is a small position of the portfolio, though, about 1.5%, so it's not hurting it too much. And then we have METV over here, which is the Metaverse ETF, right? And I know what you're thinking, why are you investing in the metaverse? Because of stocks like Meta, right? And Meta is just absolutely bleeding. But really, this is when it comes to dollar price. Okay, the current price is 7.39. This is relatively cheap. Way to invest in some of the top tech stocks there is, right? Like Microsoft, like Google, like Nvidia. Okay, that's a way to do that is through this round hill ball metaverse ETF. So you can go ahead and look up the ETF and see all of their positions and all of their holdings. And you'll find that it's basically a nice big bundle of a lot of the top tech stocks in the stock market, right? Another one that I really like a lot, that I really wanted to increase my position on, but it's kind of just been going up. I was waiting for some dips, is BNGO, okay, which is in the biotech, all right? Biotech and some of the health sector have been seen as a little bit more of a defensive play, right? And they've been outperforming the market in some sectors. BNGO is one of my favorites of those. That one is also relatively cheap, right? I have about 200 shares of that, but it's only 238, for one share. So it is a pretty small position in the portfolio. But overall, I'm pretty happy with everything and how it's going. I do plan on cutting some of the gilt and just really starting to trim that position and adding it to some of my other positions, right? I want to get up to about 200 shares of Zim. Fubo, I do like Fubo a lot, right? I'm down 20% on Fubo. That's about 2% of the portfolio. And, I'm looking to, start adding some more into Fubo. So I'll probably be cutting some of my gilt, adding a little bit to Fubo, adding a little bit to Zim, adding a little bit to BNGO, right? Then we have some other places that aren't doing too well, right? If we look at BKKT, this is Backed Holdings. This company is owned by the parent company ICE, right? And ICE is the company that owns the NYSE, right? The New York Stock Exchange. So being that it's crypto related, I have a very small position of the portfolio in crypto stocks, 1%, but you do want to slowly just nibble on that. But there's been massive, things going on and developments in the crypto space, and it's been bleeding a lot, especially the past 2 days. So that's why this position is down so much, but that's okay. It's $1.87 a share currently. You can easily stack up hundreds and hundreds of shares of those and then sell covered calls against that. So that way you can at least generate a little bit of passive income. We have NNDM as well. NNDM is doing pretty good, about 8% up, 8% on that position. Then we have SPY-G, which is really nice. I like the SPY-G. This is about 11% of the portfolio. So it's really about like my third biggest position. My second biggest position is going to be KMB, Kimberly Clark. We can see I'm up about 10.5% on that position. The shares are currently $127 a piece. And this one has its dividend date coming up soon, right? So I'll be able to collect some dividend income on November 14th. The rest of these, the dividend dates haven't been announced yet. So last time I checked, right? So I'm going to be doing an update on this portfolio again in about a week or so. And we should have some more info on the next dividend payments. All right. Now, one thing I want to say is, none of this is investment advice. Just really breaking down the portfolio for you guys and, letting you know what's in here, what things I'm adding, what things, I plan to add on, what things I plan to take out of. And, just kind of break some stuff down for you guys and show you that, you can have a portfolio still growing in this bear market. It's really just all about patience. Don't buy the highs when everything is rallying. You really have to step in and start to buy during those really pain, right? During those really big times of pain, when we're making new lows on the S&P 500, when stocks are making new 52-week lows, that's when you want to be buying, right? You don't want to buy in the middle of this recovery rally and these bear market rallies, because that's really when you can get trapped, right? You'll see the market rally 10, 15, 20%, and then you buy into that, right? And then just for it to make new lows, and now you're down 20% on the positions that you got in, right? So just speaking from experience, there's plenty of positions I'm down on, right? But it's all about, allocation, and, your plan. And so even though I'm down 20% plus on many positions, the overall portfolio, with the money that's been invested in here, is up about 19%. And the reason being is because of this really big position in energy. And, if you've been watching CNBC or any of these finance, channels, they all have been saying pretty much the whole year, hey, our portfolio is overweight energy. Hey, our portfolio is overweight energy. Oh, hey, we're bullish on this stock, right? And people were talking about Meta before Meta collapsed, 80%. Like, oh, we're bullish on Meta, but we're overweight energy, right? Oh, well, we're buying some Microsoft here, but we're still overweight energy. So, I really took that to heart, and I've been wanting to take profit on these shares, but then it's also like, well, we're really not through it, right? And energy is supposed to go up, through winter. Winter is about to begin, if it hasn't already officially began, now that we're in November. But I know that we have some things to look forward to. Okay. Stocks usually perform well during holidays, usually get a holiday rally. So we got Thanksgiving coming up. And then, we have Christmas coming up. We may get a Santa rally as well. Really just all depends on the next CPI report and, the next FOMC meeting and how that goes. Okay. But appreciate you guys watching. If you enjoyed this video, subscribe to the channel. I'll be dropping videos like this every single week. And then I also do technical analysis on all your favorite stocks and cryptos. So if you have anything you would like me to look at, analyze for you, make sure to comment down below and let me know so I can do it for you. Okay, I'd be happy to do it as soon as I can.